Well, hi everyone. We have a very exciting thing going on today. I'm going to share my new risk-adjusted share price model for Tesla. And this is going to be very interesting because for a very long time, I have some criticisms of existing share price models for Tesla that are used in Wall Street. I actually think there's a lot of things about them that don't make too much sense. And let me dive right into it and explain what I mean with that. Of course, everyone is interested in this one thing, which is price targets, right? But what are price targets? Price targets are a number that banks throw out, like Morgan Stanley, for example, Adam Jonas. He says, my price target is 300 something, right? What does this exactly mean? Does it mean right now you think today the share should be at that price point? Or are you saying the share will be there or should be there in a year or in 2 years? What's your point? And surprisingly, people don't have a good answer for what they actually mean with this price target. So we want to bring a little more sense into this whole thing and understand how to model out the future. And before I dive right into it, let me just first make some disclaimers here. That's very important. So I've done modeling for a very long time now in all kinds of functions, not just in finance, also in genomics, but a lot in finance. And I have my own take on risk modeling and all these things. And my big objective here is to predict the future accurately, the same way we did it with the Elon, compensation vote, the same way I did it with the US election, the presidential election. I don't want to hear any excuses from analysts and predictors like myself or the banks. I want to hear a price target that is a number for the share price that has a timing attached to it and that is correct. That's what we have to get measured against. So the first thing we have to introduce here is a time-based price prediction. So if I tell you my price target is 10,000, for example, I have to tell you when. It's a big difference if you say 10,000 in 2040 versus 2030 versus 2026, right? And the banks avoid that, which is a big no-no. You have to put a timing on it. And number two, you have to actually say what the share price will be with no caveats. And let me give you one example. Adam Jonas of Morgan Stanley, who's a smart dude, he just came out recently and said, my price target for Tesla is 300 something. I forgot what the latest is, 310. But I believe the value of Optimus, of the robots alone, is 485 net present value today. Okay, so let me get this right. You're saying it's 310, the price target, which is very important for you guys. You see the stock and you want to know, should I buy it? Is it going up a lot or not? If he says 310, but he says there is an Optimus price target of the Optimus business line alone of 485, that makes no sense. Because either you're saying it's 310 plus 485, right? Is 795, is that your price target? Or you're saying it's 485 for Optimus, but I'm not modeling it in. So you're saying the chance, the probability of Optimus becoming a reality is 0%, right? If you leave it out, it's 0%. So really, you think it's 0%? I don't think so. So I want to present you guys how I think about modeling this out and show you some pieces of my model. Of course, these things are very complicated. So this is just the first video on this. I will make it quick. I will give you a central intro with screen sharing. And this serves just to get your feet wet with this whole model. And we will do this weekly from now on. I will talk about modeling weekly because a lot of things are adjusted and there is a learning curve here. And you have to get a feel for the model. So let's jump right into that and start sharing the screen. And what I want to go through here is first an intro how these models even work. Maybe let's zoom in a little bit. So we start with inputs, right? You want to basically first set your assumptions for the model. And there are financial modeling inputs. And I will go into that very quickly. The first thing we need to do is we have to understand what a model is and how this net present value is actually calculated. And it starts with predicting the net present value, the current value of future cash flows that we will model out. And to do that, you need to determine how many years you're looking into the future. I'm saying 10. That's a very common thing to do. You say, I value a company based on the next 10 years of its cash flows that I predict, right? Then you put a discount rate on it. That's also a very long discussion. And if you guys have any questions, by the way, leave comments. I have reasons for picking these numbers. I think the discount rate, which is the interest rate you're kind of putting on the capital to discount it in the future, right? $1 million in 2030 is not worth $1 million today. You wouldn't pay $1 million to get $1 million in 2030. You need to discount it. And my discount rate is 7% because normally you use the interest rate, the lead interest rate of the Fed, and add like an equity premium to it to 5, 6, 7%. And some people do a much higher discount rate. I think they confuse something here that I will go into in a second. They are conflating discount rates for interest with risk discount, which is a different thing. Then we have some business line assumptions. I will go into this later. That's too much right now. And once you have these DCF and price targets, you can basically then start thinking about the growth model, right? And the way I structured this here is you have demand and growth, you have Optimus sales in millions, you have the install base in millions, you have an Optimus growth rate that is a function of that, and you have the Robotaxi business, right? That's the demand and growth I'm modeling out. The core business I leave, I put further down. That's not that interesting. And for a new Robotaxi, same thing. How many new Robotaxis are you deploying or selling? And what's your active install base, which is the kind of summing that up. And what is the growth rate here? Now, I have some assumptions for these things up here, where I'm basically talking about how many Optimus pre-orders do we get, right? That is important because I assume ramping up Optimus while you have the pre-orders not filled is much faster than the growth after pre-order fill, right? If you have 1 million pre-orders, you try to fill it up as quickly as possible. Once you hit it, you need to go with, organic demand. And for Robotaxi, we have a fleet size, an initial FSD fleet size which is how many Teslas actually on the road. How many millions the Tesla fleet is and how many of them might have the potential to opt into the Robotaxi fleet. I assume 50%, right? 50% of Tesla owners might consider sending their car for work. And then we have the FSD fleet per annum growth, right? We have basically growth rate below fill and above fleet fill. So as long as you have a bigger fleet than the Robotaxi fleet size, so more people are waiting to become Robotaxis, you have a very high growth rate. Once everyone is filled up, you need to grow by producing more cars, so that goes down. So actually all these things are not that important. We can discuss this in later videos, all these business assumptions. This video is really about explaining to you guys in the model you're first building basically a projection of how many units you deploy, and then you model out the cash flows, and then you're adding certain risk components to the model. So very important input here, and that is very decisive. What is my assumption when this whole thing actually starts? When does Optimus start and when does Robotaxi start? And you can see here, I'm assuming 10,000 Optimus units being sold in 2026. I think that's conservative. There is a certain chance that things happen already in 2025. That's the first commercial Optimus are sold. And then ramping up pretty rapidly, 1,000% or 10x by 2027 to 100,000 Optimus units sold. And you see the installed base grows. And then it grows basically, at 200%. Here, basically before we hit the 1 million pre-orders. And then it goes down the growth rate over time and approximates here 100% long term. And there's a lot of arguments here where we end up, but I tell you just right now, I'm mildly aggressive, much less aggressive than Elon. I'm saying we reach 3.5 billion bots deployed by 2040. 3.5, not 8 billion. 3.5 billion. The reason, for some people that might sound completely insane, but watch my other videos. I'm actually working on a book on the robot revolution. I think we will see so much more robot demand than anyone can imagine for very simple reasons. Once the robots are alive, this becomes a question of survival for every business that relies on manufacturing, for example, in the developed world. You can't afford not to switch to a robot workforce very quickly within 24 months. Otherwise, you will be dead. All of Germany, all of South Korea, all of Japan. This is a giant, giant revolution. That's why I think, and that's the key of understanding this model, why this is so important, that this Optimus scale will be very aggressive. And Tesla won't have a choice but really pushing down the gas pedal, no pun intended, because there's competition in this case. And the demand will be crazy. So this will happen a little faster, more aggressively than people think. And on robotaxis, long term, we are ending up at 230 million robotaxis deployed in 2040. I have my skepticism when this actually starts scaling, but once robotaxis actually work with, let's say, 1,000 or 10,000 times higher safety than humans, which is the minimum required, in my opinion, because you can't kill people with a robotaxi, even if you're 100 times better driver than humans. Killing people with robotaxis, even if you kill 100 times less people, is still not an option. It's a PR complete, Armageddon. You need to be way better than people think. So that's why I'm skeptical on FSD. But once it works, similar to the robots, no one can afford not to switch its entire transportation infrastructure, cities, all kinds of things, into robotaxis worldwide. So 230 million by 2040 is, I think, also a realistic number because there is a very aggressive forcing function. Okay. There is some very complicated things down here where I actually model out all that into dollars. Let's skip that for today. I just want to give you an overview. You then translate this into DCF models, discounted cash flow models, right? And here it gets very interesting. We are getting to the share price in a second. But first, we need to understand, here is the discounted cash flow total over 10 years. And you see it, it stops at 2031, right? Here. At 90 trillion, by the way. This is not risk discounted. So that's assuming there's zero risk for Tesla, which is not true. So at zero risk for Tesla, in 2031, forward-looking 10 years into 2040, here's what you see. The robotaxi discounted cash flow value is 15 trillion, right? You will make 15 trillion in free cash flow from 2031 to 2040 in robotaxis. That's my prediction. You will make 73 trillion in discounted cash flow over 10 years in 2031 to 2040. And you will make, a trillion in the core business. I think that's conservative, but no one cares. So that gets you to 90 trillion, which is a lot. Still conservative, by the way, I think. If I had to bet on it, I think this number will be higher, but that's a different question. So now, what are we doing here to make this a realistic model? Well, I'm introducing something that I invented. I'm very proud of this, which is the risk inputs. So here, this is what Adam Jonas on Wall Street is actually missing. The most important instrument, I make this very big so you can see it. The most important instrument in financial modeling is actually something Wall Street doesn't even know about, which is not smart. This instrument allows you to do what I call future value-based investing. You're probably familiar with Warren Buffett and value-based investing. I believe in value-based investing. You should always stick to the numbers and be, a little cynical and be cash flow centric. But you can't be stupid and say, well, the future doesn't exist. The future does exist in the future, and you need to anticipate it, but there is risk. And so it's kind of a simple model, but it's smart. You are taking all the risk dimensions that matter for Tesla. For example, competition. What is the risk that Tesla gets destroyed, knocked out by the competition? I'm saying 15% for Optimus because there is significant robot competition with very smart cookies, but it's still just 15% because Tesla has all these, we can go into this all day long, very strategic advantages over everyone. So, but it's not zero. So it's 15% risk. What is the key man risk? This is very sad and I don't even want to talk about, but what if something happens to Elon? If you look at history, it actually never happened to any super entrepreneur or pioneer that they died, right? So, but it's not zero. I estimate it's 2%, right? Let's say it's a 2% risk that something really happens to Elon, which would be horrible and definitely very, very bad for the future. What about technology risk? The technology risk means what is the risk that this doesn't work? That we figure out at some point, oops, we were all wrong. The whole humanoid robot thing just fundamentally cannot work. I think it's 10%. For many reasons. There is a 10% risk that something is actually we overlooked, and there is a strategic, deeper reason why they can never do a lot of different jobs. Again, there's a 90% chance. Here you see the probabilities. There's a 90% chance this risk is not there. Product and demand, I think also a 10% chance that the demand is actually lower. I'm very bullish on the demand. I think there's just no way, if these risks are taken care of, that there is not a massive, crazy demand. But let's say 10%, something is overlooked. And then political regulatory, of course, that is super low now with Trump and everything. On Robotaxi, actually, you can see how I distribute the risk. I'm saying technology risk, is actually much higher for Robotaxi. The risk that FSD cannot be deployed in the next 5 years or something is so much higher than the risk that Optimus cannot be deployed. Because, as I said, people say full self-driving needs to be 100 times safer than humans. I disagree. I think FSD needs to be perfect. You cannot kill people. And people don't understand what it means to not kill anyone in a car if you have 10 million robotaxis on the road, or later 250 million. You need to be perfect. You need to be infinitely better than humans, not 1,000x, infinitely better. And that's, people underestimate this. I'm not saying it's not possible, but there is a much higher technology risk. So you arrive at the total risk here. The total risk that Optimus doesn't happen is 36%, which is pretty high. And the total risk Robotaxi doesn't happen is 44%. By the way, this is not additive. That's not a sum. This is calculated differently. It's basically you multiply these different things together to arrive at the probability, and then you take the risk here. I can go into this later. We don't do math today. So then you have the risk, and now you use that risk, right, to multiply it. And here's the key. Here's how you model the future. Now you have your risk, and you can adjust this at any time, right? There's for example, if there's an event and there is a new Optimus presentation, it will impact the technology risk. If we see Optimus is already done, it already works perfectly, I will lower that to 5%, and that will impact in real time my entire model, because that risk is going down. If Robotaxi is deployed, this risk is going down, and so on and so forth. If regulatory happens like today, this risk is going down. So you are now knowing your risk. And what I did here, let's start with the future value. You're taking your discounted cash flow of, for example, 90 trillion and multiply it with the risk, each of these risks, right? And so you see the Optimus discounted cash flow of 73 trillion over 10 years in 2031 is multiplied with the risk and ends up being only 47 trillion. Because we are saying the odds that this doesn't happen are 36%. So therefore, the value of that money is only this. This is very different from the discount rate, right? This is the actual hard risk. And once you do all of these things, you can model your share price. And I'm going to give it away right now. So you see some of my share price calculations here. They're subject to change. And this is not investment advice, but it's something I use for my future value-based investment model. And you see that the raw share price in 2024, based including all these risks, is 409. The raw without the risk is 491. That's the future value-based share price, and the future value-based share price, including the risk, which is the actual fair value, is 328. Which was surprising because I didn't look at the share price. So this is not far off. And in theory, that means Tesla might be overvalued right now slightly. But here's the thing. You see how the share price goes up. And this is new about my model. Every year, and that's logical, the share price target actually goes up dramatically because it's a 10-year forward-looking model. So of course, in 2025, you're factoring in the 2034 cash flow, which you don't here, because it's 10 years out. That's very logical, right? The share price target should increase pretty dramatically with a very exponential company like this. And that means, is Tesla overvalued at 350 today? Probably not, because we are end of the year 2024, and we know 2025, the fair value, if the risk stays the same, it doesn't go down, otherwise it goes even higher, right, is between 640 and basically 1,000. That's the fair value of the share based on future cash flows in 2025. So if it's a 350 here, I wouldn't say it's overvalued if you know it ends up being 642,999 next year, and then it goes up. So this is a very conservative model that does not take into consideration the Wall Street instinct to say, well, all the financial games that you're saying, well, the fair value is 640 next year, but we know the fair value is going to be, 1,100. So I'm already pricing that value into 2025. These games I'm not playing here. I'm super Warren Buffett about it. I'm the Warren Buffett of the future, right? It's value investing of the future. So this is a very conservative, disciplined model that says no fantasies here beyond the actual hard discounted cash flows, and then further discounted by risk. That number here and that number, by the way, that tells you the risk, right? So there's an upside. There's an upside potential in 2026 of 684 share price could go higher if the risk would go down to zero. If the risk goes up, by the way, this goes down, right? If something bad happens. So there you have it. What I want to do in the future is discuss with you guys more of these assumptions, but make sure we have all these different modeling dimensions in the model. And this is all real time, so I can change any number and this all changes. And from there, you can basically go into this. This is a whole different discussion. What do we do now in terms of trading? And you see $100,000 based on the fair value share price would end up being 5 million in 2031 if this happens, right, this way. So interesting model. I love these models. And when I do something, I'm not doing it to satisfy like clients, like a Wall Street bank. I'm only doing it for one reason. I want to be right. If I say this is the share price, well, I might be wrong in terms of actual midterm share price, because Wall Street sometimes can be very stupid. But in the long term, I'm pretty sure I'm right about this price. And I know if Tesla, if the risk doesn't really change and Tesla goes to 1,000 next year, which I think is very possible, I think it's going to be short-term overvalued, right? And then you have to make up your mind. If you know it's 1,000, but the fair value is 1,000 in 2026, 1 year later, what do? You sell. What do you do? But given that trajectory, you probably won't sell. But I want to know what the truth is, and I want to compare the actual share price to this. And if for whatever reason Tesla goes down from here or stays flat the next year, which is very unlikely, we know that it will catch up to that central trajectory. That's how I think about it. So I hope that was helpful. I know this is a little complicated, but that's why we have this channel. And I'm going to go a little deeper into all these things, and I want to have a discussion with everyone. There will be some exclusive interviews coming out with the Cyber Bulls, with Gally, with all kinds of cool people I talk to. And we are going to continue this model, make it smarter, make it better. But as you can tell, this is a different type of model that is actually much more realistic than what Wall Street does. I hope you enjoyed that. Please let me know what you think. Any kind of substantive input of any sort, right? From Optimus trajectories, from Robotaxis to modeling ideas. Let me know on X, let me know on YouTube. Subscribe, follow me on X. I will ramp up the frequency of these things now and getting to daily this year on X and YouTube, because I think we're in the middle of a massive revolution that no one understands how big it is. I believe AI's real body embodiment are the robots, and all the fantasies about AI changing the world will actually come true through the robots, and it will come true starting next year, and Tesla will be in the lead of that. It's very important to understand that revolution. It's very important to be on the right side of history, which means you need to become a capital owner. Otherwise, you will be left behind. And if you're a capital owner, you will live in abundance. I truly believe that. We still have to be cautious and not make mistakes. Otherwise, we lose money. This is investing. But it's very important to really stay on top of this thing day by day or week by week from now on into the next few years, because what's going to happen is going to be very, very important. So thanks for watching. Thanks for following this, and thanks for your input and comments. I really enjoy this, and I hope you took something away from here. We will have much more of this very soon. See you then.